Welcome to episode 7 of CrystalCast. Today we're talking all things second charge with James Briggs from Precise Mortgages. Following on from recent MCD changes, many commentators expected a boom in the second charge space. And while business is increasing, it's certainly not increasing at the levels that many people forecast. So what opportunities exist in the second charge space? And why should brokers be looking at it in more detail? This podcast is for intermediary use only and primarily focuses on second charge lending. Today we're joined by James Briggs, Specialist Distribution Manager from Precise. Hi James.
Hello Chris.
Hi, how are you?
Very good, thank you. Thank you for having me.
No problem, thank you for coming along. If you can start us off in traditional CrystalCast fashion, can you tell us 3 surprising things about you?
3 surprising, well, probably the hardest bits of the podcast for me, this Chris.
I always try and avoid this one myself.
Yeah,
Say
okay.
That for the Christmas special.
Okay, so number 1, I'm a qualified tennis coach, which not a lot of people know, so play tennis to a reasonable standard. My son got to a national level, so I thought, why not take the qualifications? And aged 8, he started beating me. So those qualifications were largely redundant after then. Number 2, we have recently adopted a pig at a local animal hospice called Gilbert. So he was bought as a handbag pig. What the person who owned him previously thought was a micro pig, right. And then he grew into a 40-stone beast. So she had to give him up. So we now look after him, pay for his upkeep, go and visit him a couple of times a month. Gilbert the pig, and finally, 2019 marks my 20th year in specialist lending.
Wow.
So the vast majority of that time has been spent on the second charge side of the market. So I'm very proud of that, and here's to another 20 years hopefully.
Brilliant, thank you for that. So you've been in the industry a long time. What trends are you currently seeing then in the second charge mortgage space?
So I would say we're definitely seeing a shift in the type of business that we're writing. So historically it was heavily weighted towards employed applicants, and applications for self-employed played a very small part of that. Mm-hmm. We're running currently at about a 50-50 split between the two. So we've seen a real rise in applications for self-employed applicants, which kind of follows with the growth of the number of people that are self-employed in the UK. So, estimates are that it's above 15% of the workforce now. So, it kind of follows through that we'll see more applications from those clients. So that's great. We're also seeing more diversity in terms of the purposes that seconds are being used for. So again, historically, back in the 90s and in the noughties, most seconds were used just for debt consolidation or home improvements.
Yeah.
We see a much wider variety of purposes now. So that can be clients looking to invest in property, tax bills, business use. So that can be to invest in an existing business or to start sideline businesses, women going back to work after a period of maternity, that kind of thing.
Yeah.
People buying holiday homes abroad, helping children onto the property ladder, buying land, real mix of purposes, which is great.
Yeah.
And I guess finally what comes hand in hand with that variety of loan purpose is larger loans, which is good for all. So historically, you maybe see 1 or 2 250 grand loans a month, whereas they come through far more frequently now. So it's not uncommon for us to fund several large loans approaching $500,000 each month, which is great.
Yeah, the larger loan piece there is quite interesting. Maybe 2 years ago, our average loan size was around about 40k on seconds, whereas last year we're looking much closer to the 77k mark.
Yeah, that's what we're seeing.
Yeah, very interesting. So you've touched there on the changing demographic of the UK population and how that's affecting the loans that are brought to you. Has that caused problems from a product point of view or a process point of view?
Not necessarily, because we've always billed ourselves as self-employed specialists on our mortgage and buy-to-let side, and that's followed through with policy to second charge lending. One of the changes we have made and seen is the how we validate income for self-employed applicants. So historically, it was painful for clients to get paper-based SA302s from HMRC. They used to quote 5 or 6 weeks when the client called up for them.
I remember those days.
Yeah, lots of frustrated clients and underwriters on both sides.
Yeah.
So lenders who accepted accountant certificates were sometimes favoured over those that didn't. Whereas now with HMR's new system where clients can log on and easily access tax calculations and tax year overviews, our feedback is it's much more straightforward now for clients to access that information than even send a questionnaire to their accountant for completion. So that's really helped speed the process up of self-employed applicants, and faster completions means better conversion for all.
Yeah, definitely. So obviously we're all seeing more in seconds than we've seen before, but I think it's fair to say there hasn't been the uptake in seconds that may have been predicted after the changes to MCD. Have you got any thoughts on why that might be?
I guess that depends on what your expectations were of the changes post MCD. I think we all hoped that there'd be a light bulb moment and all mortgage brokers would instantly start quoting on seconds on every capital raising remortgage, but looking back, I think that was a little optimistic to say the least. I would say we are seeing growth. It's just more gradual than we probably all hoped for. We speak to new brokers every week, as I'm sure you guys do at Crystal, where they've not considered a second before, and you pose that option to them, and they come back with, I didn't realise you could use seconds for that. And you see the penny drop, and we are seeing more and more uptake from brokers, particularly from the conversations we have at the at the mortgage expos and those kind of round table events that we do as well. But I think what we shouldn't forget is we're operating in an environment where we've had probably the most inexpensive remortgage deals in history.
Yeah. So
when you've got remortgage deals at 0.99, it can often be the best advice for the client to go for the remortgage.
Mm-hmm.
And if that's the best option for the client, then that's good for me, because the client should be central to the product selection. So that I think that very low interest rate environment has kind of reined the second charge growth off somewhat. Although there are probably still some broker myths around seconds and misconceptions that we need to continue to work hard to dispel. So I still hear that seconds are for adverse clients only. They're small loans, and a remortgage always works out cheaper. So there's still lots of work we need to do on education.
Yeah. So that leads us nicely into the next question then. Do you think brokers understand enough about seconds?
Knowledge is definitely improving post MCD, but if you look at the size of the remortgage market versus the size of the seconds market, and that's it's around a reported £100 million a month at the moment, there's a huge gap, and that for me that tells me there's still significant work that needs to be done on broker education and helping brokers to understand seconds. Unfortunately, I still hear the phrase occasionally in presentations. None of my clients ask for second charges, which I'm sure your sales guys have heard that as well. And it's incumbent on the broker to run the comparison between the remortgage and the second charge to find the most suitable option for the client. That's a big part of the MCD implementation paper, but unfortunately some firms have opted out of that, which invariably means that there's a proportion of clients that aren't getting the most suitable product, and that's not great for the market.
No. So do you think networks, clubs and specialist distributors have got a bigger role to play there?
Yeah, good question. So out of the three, I'd probably say specialist distributors like you guys at Crystal are doing a fantastic job to raise awareness and grow distribution of the product. The same can be said for some of the clubs and networks. We've had real support from certain clubs and networks, which is great. And they allow us to share a platform with them and talk about seconds on an even footing with remortgaging traditional options. I think there is more that some of the networks can do to help their ARs get to grips and understand seconds more, and the lenders are more than willing to help and take part with that. But really, what I'd like to see is the industry pulling together more to raise awareness and to raise understanding of what can be really valuable products and the best option for clients some of the time, and increase the amount of business we're doing overall.
We've certainly seen that from new brokers that have come to second charges. People that maybe haven't done them before or thought they were tricky, they come to us with the deal, get the deal placed, and then all of a sudden we get 3, 4, 5 new cases from them. It's almost that light bulb moment that you were talking about earlier, that awareness that this is a solution. It's no longer that product of last resort where it's 10, 12, 15%.
Yeah.
It's now a viable solution. Rates are now starting from low 3s, mid 3s.
Yeah, I'm right. Rightly so as well. This is most of the major lenders are backed by retail savings banks, so the funding's there. The products have never been more competitive. There's only so long that brokers can ignore seconds for the ones that aren't engaged already.
So Precise have been very vocal around the education of brokers. Obviously, Bridging previously raising the profile of that sector very successfully. More recently in the buy-to-let taxation piece. Do you feel that sets you apart from some of the other lenders in the market?
I don't think we're alone in our drive to educate brokers. I think some of our competitors do a fantastic job as well. Some lenders have different views on the importance of broker education, but for me and the wider sales team at Precise Mortgages, it's one of our top priorities. Mortgage distribution in recent years has shifted heavily towards the intermediary. So depending on what stats you look at, it's around 75% of new mortgages are intermediated through brokers, which is great. So why wouldn't you focus on that community? At Precise Mortgages, we're 100% dedicated to financial services intermediaries, and we want to help brokers get the right product and right solution for their clients first time. So we're lucky to have close relationships with specialist distributors like you guys at Crystal, mortgage networks and clubs. So you've all been really supportive of the education drive in the last few years, and long may it continue.
It's essential for us at Crystal as well, because we don't market to the actual borrower.
Yeah.
So for us, it's about the broker spotting the opportunity there. So if the broker doesn't know to look for the opportunity, we don't get business off the back of it. So education for us has always been a big driving force, and it's great working with lenders like Precise Mortgages, where we can go to market with roadshows, with emails, with webinars and documentation, that we can actually say, look, this is an opportunity for you, let's embrace it, let's move forward, and we can all do business.
Yeah, and it's interesting using those new platforms as well, as technology evolves, so like the webinars, the podcasts like this one, but it gets the message out to a wider audience. And what I'm most concerned with is raising the profile of seconds to the entire market. Even if that means some cases go to our competitors, that's great, as long as people are considering seconds, because they are such a valuable product.
It's an interesting point there about technology, because it's great from a marketing point of view that we can now reach people on multiple platforms. We can now speak to brokers while they're in the gym or driving in the car or wherever it may be. But do you think technology's got a bigger role to play in the actual processing of the application?
Yeah, again, I think I think we've made some strides in recent years. There is more work to be done, probably from a back end perspective, to make taking that client who's committed to a second through to completion. There are things we can do there from a technology point of view to make that journey smoother. And we've got a number of projects going on behind the scenes at Precise Mortgages HQ. Working on various different things to smooth that journey out. But there are definitely there are improvements that can be made. But I can't say too much about that at this moment in time, Kris.
Of course. We're certainly working on the technology side of it. We're working on things like sourcing systems. We're working with new technologies coming to market. And for us, it's about the user experience with that technology. We launched open banking probably 9 months ago now, and it's probably fair to say we haven't had the take upon that we first thought. And I think there's a perception thing out there with the general public that, you know, we prior to recording this, we talked about data breaches and the issues around security and things like that.
Yeah.
So for us, it's about ensuring technology is actually usable rather than just being a little gimmick that we can put on the website that says we now do this. Because as you touched on earlier, it's all about that customer journey and getting that outcome to be as efficient as possible.
And it's as we also talked about, it's a generational thing, isn't it?
True. Yes.
So the clients where you will see the take up on the likes of open banking will probably be under 35, probably under 30. We're the wrong side of that now, unfortunately.
Unfortunately, it's a good job it's audio and not video.
But yeah, the homeowner generation, people are older who buy houses typically now. I'm not sure what the average age of a first time buyer is. I imagine it's late 30s, early 40s.
Yeah.
So those are the people who are probably a little bit more sceptical when it comes to those type of interfaces. So
yeah, very much so.
The public will get more comfortable as time goes by.
Yeah, it comes back to that education piece, doesn't it? We need to educate people for the benefits of certainly the front end technology.
Sure.
As to why it should be used rather than it just being something else that they need to do. But certainly at the back end, open banking for us is a really useful tool. A couple of cases last year where we spotted issues on them very early. We didn't have to wait for the client to send in bank statements. And again, if a customer's got multiple bank accounts, we could be talking about 30 pages of bank statements there, which especially from an underwriter's point of view, if you have to interrogate all of those, it can be quite time consuming.
Absolutely. Yeah, absolutely. We would want to try and avoid that where possible, but within the parameters of lending responsibly.
Of course. The Precise are unusual in the fact that you've got different BDMs across different sectors of the market. We've touched on it very briefly, but Precise are obviously a multifaceted lender. So when a broker sees a BDM from Precise Mortgages, they hear about 4 or 5 different product areas. What strength do you think that adds?
Well, I think, so just to clarify then, so our BDMs are multi-skilled in the areas of new build, residential mortgages, buy-to-let mortgages, both personal name and limited company, bridging and seconds. So what that allows us to do is to more widely get the second charge message out through our network of 15 BDMs, I think it is now.
Wow.
And growing. So I spend a lot of time with the BDMs, developing them and growing their knowledge of seconds. And most importantly, teaching brokers to be able to spot opportunities for seconds. Because as we said earlier on, not many clients knock on the door and say, I need a second charge loan.
Correct.
It's really down to the broker to be able to spot that opportunity. So it's, for me personally, being responsible for second charge distribution, it's great having that resource of the BDM team to be out there.
So especially if a broker's strong in say first charge residential but not doing anything on seconds, so the door's already open there for you.
Yeah, and they will have clients where a second is more suitable or where a second is maybe the only option because of income multiples, and the danger is that client walks out the door and goes to a competitor. And not only do they potentially lose the opportunity to write that second, but life insurance, critical illness can all be rebroked in the future. Yeah. Plus, potentially you lose any referral business from that client. So it's really important as a customer retention tool, if nothing else, to be engaged with seconds.
Yeah, and to maximise the opportunities that are in front. There's only so long people can survive on doing PTs.
Yeah, exactly. A big thrust of our presentations in 2019 is encouraging brokers to look at their business model from a commercial point of view and where their income comes from. And if they are entirely reliant or heavily reliant on vanilla purchases or remortgages or product transfers, as you said, what are the potential threats for that coming down the line? We talked about open banking.
Yeah.
As that develops, it's probably going to get easier and easier for clients to transact with high street lenders online. And brokers potentially can be taken out of that process altogether. We're seeing more 5-year fixed rate products than ever before as a nation, because there's some fantastically priced 5-year fixed rate products out there. But that means clients get taken out of the 2-year remortgage cycle. Yeah. So how do brokers intend to diversify their business model and income streams moving forward? And that's where we think specialist lending, not just seconds, but bridging finance, buy-to-let, that's where that plays a really critical part in helping brokers to protect themselves and grow their businesses over the next few years. A big part of that is choosing your distribution partner correctly. So having a distribution partner like Crystal, who can take care of buy-to-let, residential bridging and seconds, it's a really valuable tool in the broker's armoury. So I'd encourage brokers to talk to specialists and forge those relationships now.
So we've touched a little bit earlier on the opportunity for brokers, and that they need to understand more about when to use a second. We've got a forum here with brokers listening. What do you think should be the key flags for a broker when they should start considering a second charge?
Great. Okay. So the key ones from my point of view, clients that are on long-term tracker deals, maybe legacy products that aren't available anymore. If they want to capital raise and they can't get a further advance, or the lender wants to move them away from that product, a second can be a great way to protect their existing mortgage deal whilst releasing the extra capital they need now. We talked about 5-year fixes earlier on, so clients that want to capital raise midway into a 5-year fixed, where there's no further advance available, you're going to take the clients away from that mortgage product and for them to suffer the ERC, or top up the borrowings now and review the circumstances when they come to the end of the tie-in period. Income multiples is a great reason to consider seconds. So most second charge lenders will work up to 6 times income. Obviously there's affordability checks behind the scenes to ensure that we're lending responsibly, but that can be a great way of topping up someone's borrowings for any purpose, as we talked about earlier on. You've got the unusual purposes like the tax bills. Certain times of the year we see spikes in those. Commercial clients, self-employed clients who have established, maybe got their first year's trading, we're then comfortable to lend to them and they want to kick the business on to the next level and invest in machinery, stock, IT, commercial premises. If there's no commercial funding available via the bank for that, then potentially a second can be used for that. So it's really flexible. And then you've got all of the clients whose circumstances have changed since they took out their existing mortgage. So you might have clients who've gone from being employed to self-employed. They may have gone through some testing times, picked up a little bit of adverse potentially. Are you going to take them away from that prime high street mortgage just because of a couple of missed payments on a credit card? Again, use the second, potentially debt consolidate, tidy them up, and then look to review the circumstances in a few years' time. So that's just a few.
Yeah.
There are a magnitude of reasons, pretty much any legal purpose. But what I'd impress on brokers is, if you're not sure, pick the phone up to a specialist distributor or a lender and ask the question.
Brilliant. You touched there on the flexibility as well, and again a little bit earlier on we talked about rates being lower than they've ever been before, but the products are now much more flexible as well, aren't they? Obviously you've recently removed early redemption charges on all of the products. Yep. So not only is it cheap from a rate point of view, but the peripheral fees are obviously much better now than they ever used to be.
Yeah, absolutely. Yeah, we only have a £300 lender fee on our residential products, which is low. The clients aren't picking up the conveyancing costs that they potentially would do in the first charge world, and rates have never been cheaper. So we get a lot of clients who on the early repayment charge front, they don't necessarily intend to exit early, but they want the flexibility to be able to make overpayments if they can. So by removing the early repayment charges, we've kind of allowed penalty-free overpayments for those clients to eat into the capital as and when they see fit, and that can work really well for clients who receive annual bonuses and quarterly bonuses.
It fits in really well with the fixed rate piece as well, because if a second charge is the best option and then they review the whole transaction 2-3 years down the line, it then makes the second charge actually a solution rather than being another product to tie onto the back.
Absolutely. And you'll see brokers who they perform a product transfer to lock the client into maybe a 5-year fix with their existing lender and then do the second immediately after.
Okay.
which is absolutely fine as
Yeah.
well. So making sure they've got the most competitive product available from their existing lender, and then topping that up with the extra borrowings via a second.
Brilliant. So it all comes back to that broker identifying the opportunity and then looking for the best solution, best
Crucial.
overall solution. for their
Absolutely
client.
crucial.
Yeah. That's really interesting there, thank you. So just to wrap up, if you could make one change to the industry yourself, what would you be looking at and why?
Okay, great question. So what I would probably go for is I'd like to see a time where intermediaries document and present the second charge alternative to clients on every capital raising remortgage. So give them the illustration for both, detail the total amounts repayable over the term for both, and have that as the basis for the advice.
And that should be much more viable now since MCD. The illustrations are the same. They should be able to make the same comparison between them.
Yeah, like for like comparisons far more straightforward now.
That's really helpful for brokers because it stops them being transactional and really makes that process a relationship, using the skills of the advisor in the best possible way.
Absolutely right, yeah. That's what we'd like to see.
Excellent. Well, that's been really interesting there, James. Thank you.
Thank you for having me.
No problem. There's a lot of good, interesting topics there that I hope the brokers listening will take away and hopefully enhance their business as a result.
Let's hope so. Thanks, Chris.
Thank you. To hear the rest of the series and be notified first of future episodes, hit subscribe. And to discuss any of the topics covered in today's CrystalCast or any other specialist finance requirements, call us on 01827 301070 or visit our website at www.crystalsf.com. Thank you to today's guests, and as always, thank you for listening.